So, why cash flow? Why do we talk so much about cash flow as the means to accomplish financial freedom? Well, if you look at the typical financial model, the goal is to accumulate a nest egg or a pile of cash, or another analogy would be climbing a mountain. Climb up this mountain and get to some pinnacle where you have enough of a lump sum in your accounts, and then at some point, you'll be able to live off the interest. Hopefully, not cut into your principal, hopefully, not reduce that amount, but have enough money to live off the interest into the end of your life without running out of money, without having to cut back your lifestyle, and without having to work longer than you had planned. And this is the typical retirement model of thinking, where I work now, build up this pile, get a certain amount in my nest egg, and then divest that or distribute it in my retirement years. Here's why it simply doesn't work. That whole model is focused on creating cash flow in the future. But a lot of times there's a challenge in getting that dollar amount to create the cash flow you want for many reasons. One, it's very difficult to build up a pile of cash large enough that would actually be able to create a stream of income from the interest that would allow you to live into the end of your life. It's also very challenging when you have factors like risk or potential loss of value, or potentially you lose some in some of your accounts, and so you have to take more from your cash accounts to compensate for that, or you have to cut into the principal, which then reduces the interest disbursement, or you have to reduce the income you take off in order to make the capital and the principal be preserved. Everything you look at when it comes to the typical model of financial planning leads to one end goal. The end goal is to have enough cash flow during your later years of life to be able to have a good standard of living, to be able to live a good life and know that you have bills paid for and that you can spend what you need to spend in order to accommodate the lifestyle you want. So it's really about cash flow in the future. So if instead of piling up a mountain and then trying to come down that mountain, if instead we think about the volume of cash flow we can create today, we'll be much better off. And here is why. If we're looking at an end goal of saying we want to create, say, $10,000 of monthly cash flow in the future, we can work that backwards and reverse engineer it to now, saying, how do I put my cash to work in a way that I can create cash flow from it? And usually this is investing in things like alternative investments, putting money into annuities, putting money into a business or real estate that's going to produce income for you. Now, this income from assets, some people would call passive income. You can also be just called income from assets. But as soon as you're able to create some income from assets today, you're able to use that cash flow to create more income from assets in the future. It looks like this. If today you had leftover after your expenses, cash flow in your current life of, say, $1,000 a month, and you use that to put over into an account where it's growing, you're accumulating something in a pile of cash. And if you use that then to invest in a rental property or invest in a business or put that into some kind of alternative investment, you're then able to create and produce this stream of income. Now your income is increased. So if we look at the typical standard of the definition of cash flow, it's income minus expenses. That equals your cash flow. So if you can find ways to increase your cash flow today with the money you already make by becoming more efficient with your expenses, you create a bigger buffer, a bigger gap between your income and expenses today. You're able to build savings. You're able then to use your savings to invest in cash flowing assets. If I'm able to take that $1,000 a month from my current income, invest into real estate that's going to produce maybe, say, another $1,000 of annual income, then that will be able to be used to invest in additional properties or additional businesses. And it can be a compound effect or a multiplier effect because I have more cash flow today. And every time I get more cash flow, I use that money to put to work. So it's this building so that by the time I get to financial freedom, I have all of my cash flow coming from assets, enough to cover my expenses. Now I can choose what I want to do with my life. I can choose whether I want to continue working in the same role that I'm in now, change my business model, step back from a business, sell a business, but I don't have to step back and retire and be put out of commission or out of use from working a job. I'm in a position where now I have freedom of choice to do what I want to do with my life. So that focus on cash flow in the future really then helps us to reverse engineer and say, how do I create cash flow today? And as soon as you start asking that question, how do I create cash flow today? Your mind becomes opened up to different possibilities, and you're able to really think differently about how to be in control of your money and your financial life and create the financial destiny that you really want. Hey, thanks for watching. I really hope you liked this video. If you did, click the link in the description box below for more information. Like this video, share your comments, questions, and feedback in the comments section, and don't forget to hit subscribe to our YouTube channel.